Hello everyone. In Chapter 6 you're going to be studying the process of creating a manual. Hello everyone. In this chapter you're going to be learning about the process of creating a master budget for your company. What is a budget? By definition, it is a quantitative expression of a proposed plan of action by management for a specified period. In simpler terms, it is the roadmap for your company for the upcoming period. This is what we expect our operations and financial position to look like during the period. And in that process, this is what we're going to have to make and sell and purchase, etc. So it is a large strategic plan for your company that is encompassing of all aspects of your business. Making one document to cover all of the operations and financial aspects of a business would be craziness. So a master budget is really composed of a bunch of what they call lower level budgets. Budgets that figure out the numbers for a very specific portion of your business. What could some of these be? The production budget, where you figure out the number of units that you intend to produce during the period. And since you're going to have to produce those units, you're going to need to have the stuff on hand, the people on hand, and the proper facilities to be able to make them. So that's going to cause you to incur your three cost components of production: your direct materials cost, your direct labor cost, and your manufacturing overhead costs. So you're going to need a budget for all of those. If we're making stuff during the period, I think we probably expect to sell stuff, so we need to figure out what portion of all of those inventoriable costs that we just figured out on the three previous budgets can be expensed under cost of goods sold. And if we're talking about all these expenses, we better hope we have the revenue to cover it, so we should have a revenue budget, which comes up with our sales expectations in terms of both units and dollars. Not all master budgets are uniform because every business is different. Every business has its own components that it needs for operations during the period. It has its own makeup, if you will, which means the budgets that go into a master budget aren't the same from every single company. It's all about what budgets you need to make an accurate prediction and plan for what your business does. If you're a business that is heavy on R&D, you're always trying to develop new products or a superior way to offer services, you're going to want an R&D budget to figure out how much you plan to spend during the upcoming period on that aspect. If you're a business that operates in a very highly competitive market where marketing, advertising, or promoting is a huge aspect of getting customers to buy your products over the similar products of your competitors, you're going to want to have a marketing cost budget. And if you are shipping your product from your production facility to an end user, be it directly to the customer, to your own distribution centers, to your own retail outlets, to somebody else's retail outlets, you're going to want a distribution cost budget as well. Typically, in a master budget, they group a chunk of these lower level budgets into multiple sections, and the two most prominent are your operating budget, which is your expected revenues and the expenses you're going to have to incur to generate those revenues during the period, i.e. your operations. So that's inclusive of things like your production budget, your materials, labor, and manufacturing overhead budgets, your COGS budget, your revenue budget, and then any other operating costs that you have during the period that aren't inventoriable but are still a necessary component of your business. The other big chunk that you will always see in a master budget is the financial budget, making sure you have the money on hand to conduct your operations, making sure you have the money on hand to expand your business, to reinvest in your business, if you will, and also to make a prediction of what your financial position is going to look like if you hit all of the things that you predicted in your operating budget section. So things that would go into the financial budget section of a master budget are your capital expenditures budget, where you make plans for expanding your facility, buying new, more efficient equipment, etc. Basically a lot of stuff to do with non-current assets that aren't intangibles. That would go into a capital expenditures budget, cash budget, figuring out when we expect to bring in money and how much, when we expect to have to pay out money and how much, and therefore what level of cash are we going to have on hand to make sure that it's going to be sufficient to fund our operations. And then furthermore, after we conduct our operations and after we've gone through and made sure that we're going to have sufficient cash on hand not only to fund those operations but be able to fund our capital expenditures, what is our position going to look like at the end of the period? What's our income statement going to look like? What's our equity statement going to look like? What's our balance sheet and statement of cash flows going to look like? And what other statements you're making, make a prediction for all of those in your budgeted financial statements. Some budgets that you are going to prepare are going to come up with information which is a prerequisite to construct later budgets. For example, we can't really predict what we're going to have to spend in materials or labor or overhead if we don't know how many units we intend to produce. So you should make your production budget before you make the budget for your 3 cost components. And on that same line of thought, we can't really predict our cost of goods sold budget, how much we're going to expense in inventoriable costs, if we don't know how much in inventoriable costs we're going to incur. So you're going to have to make your direct materials, direct labor, and manufacturing overhead budget before you make your COGS budget. And since you made a budget that tells you how many units you're going to produce, and on your COGS budget you're going to have how many units you intend to sell, it's going to allow you, with the information from those two, to make a budget which tells you what amount of units you expect to have in ending inventory. And after you've accounted for all of your inventoriable costs, all of that aspect of operations, you would also make budgets for your operating costs that aren't inventoriable, like your R&D budget, marketing budget, and distribution budget. But those are still costs that go into your operating income, which means after we have all of those budgets prepared, we can make a prediction on what our income statement is going to look like at the end of the period. So where the budgeted income statement comes in. That's going to help us determine what our expected retained earnings are going to be at the end of the period, which is something we would need for a budgeted balance sheet. And what else would we need? Well, assets go on a balance sheet, so we'd also need to know what's our cash going to look like at the end of the period, because that's got to be, disclosed on our expectations on our budgeted balance sheet. What amount of PP&E are we going to construct or purchase? That's capital expenditures. But that still shows up on a balance sheet, so you need to make that guy before you made your balance sheet. And then your balance sheet is going to tell you the change in your asset and liability accounts that you need. It's going to tell you the changes you're going to have in your investments in your business. It's going to tell you stuff about the financing you expect for your business would come out on your retained earnings statement. All of that's necessary for the budgeted statement of cash flow. So when you're preparing a master budget, you can't just say, all right, we need 20 budgets. Everybody make one and we'll be good. Like, there's an order that they have to be made in so that you have information necessary on the later budgets in the process, which comes from those earlier budgets.